That trade ended up not working out. As you can see, we came down. I was worried when we didn't push on down. I should have probably killed the trade right there. But on this first combine, it was $302 loss. You can see this candle right here broke. It's okay to let it. You need to let that candle finish, but it broke through the fair value gap and finished above it. And that's a 5 minute candle. A lot of times it can do that and then wick back down, and then you would, as long as the candle bodies are respecting the halfway point of this fair value gap, it's okay to continue to hold it. But once it goes past the the candle takes out the fair value gap, then the trade is invalid and just go ahead and kill it. Doesn't matter if you're up, down, whatever, just kill it. And when it got down to here, because it did not go through it, I should have killed it immediately right there because it should have pushed on further down. Now, what we have here is opposing fair value gaps. We have one here and we have one here. And you got to pick a direction because of the way the dollar was moving. I chose south. I chose to short it. But at the time I entered, this had not been broken, this top of that wick right there. So there wasn't an official shift in market structure. It came down, it came up, and did not take it out, and then it started back down. And that's where I entered. And so I thought it was going to be a continuation move to the downside, and I had the dollar backing my play, but it didn't work out. And that's trading. They don't all work out. Just looking at all these, the dollar, I still think this gap's going to fill. Even though that position didn't work out, I still think I'm right on the direction. Just the entry was not right. Um, we did put up a fair value gap on the 30-minute chart down here. Probably should have been watching that a little closer. But we also have one right here on the 30-minute chart. So whenever you're trying to make a decision of whether or not to enter a trade, you have to look at those things. You have to look at where price came from, um, overall market structure. We wicked down here. This was all on Friday. Candle bodies. Those candle bodies are pretty close. So I would say, as a retail trader, you're taught to put your stop below the latest swing low. So let's say it goes up, it comes down, swings low, it doesn't take out these lows, you would move your stop to right here. And that's what the computer is going after, is the people that move their stops to right there. So it came down, it took out those stops. Well, maybe some of them didn't move it, so they're right here. It came down, it took out those stops. Now this volume inefficiency here could be the point where we go back down. But as you can see right now, we are above the 50% mark for this run. You put that Fibonacci measuring tool, this entire run is in London, and it's above it. And that's definitely a let's get out scenario. On a shorter time frame, this fair value gap could have been traded. If you don't look at the dollar at all and you just trade the fair value gaps, if I was just doing that and didn't look, I probably would have made money on that trade just because I would have been playing that 5 minute fair value gap. But in actuality, there's a little bit of ambiguity there, and I probably shouldn't have even gotten in the trade. But it's early and I hadn't even had my coffee yet. So, um, but I was looking at this market structure. Fair value gap, failed to push higher, wicked out. If I would have been up at 435, I could have gotten in on this one and made a little bit. But that right there on the 5 minute, that was my opportunity to get in. Because um, when I went short right here, I should have been going long. But we had not yet had a shift in market structure. So the more higher probability would have been to wait for that retest and get long. And that would have been from 26 to 33 at 6 points at $300. So why wouldn't I jump in now? Because the move's almost over, I would think. I still believe I'm right on the direction, just wrong on the entry. And I'll be looking for a move down after the open. Dollar is pulling back a little, but it's just kind of consolidated here. We'll see how it turns out. I hop back in this one, still sticking with my narrative. This fair value gap to the downside was respected. Dollar is pushing up through that gap. The equity did run in unison with it for a while, but now is trailing off. So sticking with that narrative. Now also, because the market is open, I have the added benefit of looking at the heat map. You can see Nvidia's fallen, Microsoft, Google, Meta, everything took a nosedive. When I first pulled this up, it was all green. And so that's the Magnificent Seven, the big boxes. Those are the main ones I look at. But I do look at the overall picture. We do have quite a bit of green. Berkshire Hathaway is another big one. That's in the Mag 7, one of the biggest caps. This one's the largest right now. And I like that I'm seeing negatives on all of those. They're in unison. So I'm comfortable with my short position. Because I took that one earlier and got smoked, I've got to make that money up plus some. So this will only get me 375, just barely break me even. If my initial hypothesis is correct, then we should go down quite a bit. I don't know if we'll get there before the open. We're only 45 minutes away now. But we'll see. It's definitely making an aggressive move south right now. So hopefully I can recoup my losses and um, pick up a little extra. This is an area of concern because it's a fair value gap. And this is as well. And then I have one marked out that's on a higher time frame. That's a 30-minute, I believe. So price is going to want to consolidate around that area. Those are the ones that always make me nervous. Should I go ahead and take my profit and wait for the retrace or just hold it? We'll see how it pans out. It's making me sweat, boys. It's making me sweat, and girls. Do we take the profit or do we hold on for the big money down here? Nail biter. Dollar going back down. Scary. Heat map. Big red. All the big ones are red. That's what's making me hold. I am going to lock in some profit though. I went ahead and added some. I've got 3 contracts on now. If we can get down here, I will be halfway to my goal of getting funded. But this is a liquidity level, so it's scaring the crap out of me. And the dollar falling, scaring me too. I think I'll take some profit. I just can't do it. I just can't do it. I want to see it go all the way to my take. If it gets down here to this green, I'm going to go ahead and take this. I'll take two.
Order filled. Order filled.
I'm going to leave one running. You can see that got me up to green again. We'll leave that one running. If it gets down here, that'll get me 550. I'll be pretty happy with that. I would like to see the dollar going back up though. There's a volume inefficiency right here. You can see where those two candles, the corners don't meet, and it will often trade into those. But there's just a whole lot of congestion here. We already went through the fair value gaps, so it's really scaring me. But that heat map, that's what's giving me confidence. When all the big ones are in the same direction, there's a pretty good chance that it's going to continue in that direction. I just don't like we wick that out. A lot of times it'll go straight back up when it hits a level like that. So I'm probably going to time stop this one just because I've been in the trade too long.
Order filled.
That put me up 126 on that one. Did I keep that one? No, I got out of that one. I'd lost 100 on that one. I'm still down by $18. I just didn't want to watch both, so I killed it. But I would have been up on it too. We'll see what happens as the New York session doesn't open till 8:30 Texas time, but they have pre-market that opens at 6 a.m. I didn't make that clear in that last clip I did. I made another mistake. I was looking at last week's calendar, didn't think we had any news coming out. I got caught by the news. Lost $344. I was up 135. But as I'm watching my guru on here talking about how this market was going to move higher, I'm seeing something completely different. Still expecting dollar to go and fill this gap. And so I took a short, and it is working out swimmingly. I do believe I'm going to leave it on. I think I'll take one off there. Go ahead and pocket some of that money, and I'm wanting the other one to run to these relative equal lows. But it may not. I may go ahead and take it. I'm just going to watch it real close. I believe we're going to get there. It'll probably go a tick or two below. So I'm going to go ahead and move it down just a touch. Go ahead and move my stop to above that. So we can get at least $400 out of this deal. But I bet you we pop those lows. If we're going to go even lower, we have this one here. Where else would we trade to? Maybe all the way down here. I don't need that much money. I can only do $1,500 a day. So that'll keep me in my consistency pattern if I can just hit this one. I can't imagine us getting that close and not taking them out, but it's going to have to do it pretty quick. I'm not going to sit here in it waiting and watch all of my money evaporate. I'm going to go ahead and take that off. Pocket my 600. Well, 800. That'd be 1100 on the day. It's pushing. I'll let it go. Come on, pop. Just wick down for me. Wick.
Order
There
filled.
we go. All right, so $1,152 on the day, and this is on a trading combine. So getting closer. I'm gonna pass it. I'm gonna pass this son of a gun. Watch for a minute and see if we go reversal here. I would expect if we don't continue lower to get a reversal. Dollar is pushing higher, but we still have that gap to fill. We could actually trade down into that lower time frame, that higher time frame. We've got these lows down here. I'll go ahead and mark out. And the algorithm is going to go to where people were long way back here. They're going to move their stop to the latest swing low. Some of them would move it here, but there may be some that still have it here or even possibly here. So that's what I would be aiming for if we have a continued downside move. But typically, when we have a move that strong, you'll have a little bit of a pullback. So you could be watching at a lower time frame for a uh, reversal. I think we might trade down to here. I don't know. But in a lower time frame, like you get on a 1 minute or a 2 minute, watch for a fair value gap to the upside, buy it on a pullback, and then you can catch another couple of $100. But I'm preserving that profit. I'm stopping for the day. Um, Once you learn how the algorithm moves and you get away from the whole retail idea that, according to this, we put up some fair value gaps, so we would have kept going and we put your stop here. You just got stopped out. This is the ICT method. I've mentioned that before. He's a very smart man. He learned all this. I learned it from him. And it is effective as long as you can get the narrative right. Thanks for watching. I hope you learned something. The only way to learn this stuff is to get in there and spend time on the charts and watch. If you listen to the guys that are having the Ferraris and saying they're going to be multi gazillionaires and they can make you $1 million in a month, that's a bunch of hogwash. Most successful traders, they're just having base hits and occasionally they'll do a home run. But most of the time, base hits. So keep that in mind. If you can just get 5 points, this one to me is kind of like a home run. I mean, I felt like I knew where the market was going since 5 o'clock this morning. My very first video I put on the pre-market review, and if you go back and watch that, you can see I called it, and then it went there. So, yeah, keep watching, keep learning. Good luck to you. Be kind to yourself. Be kind to one another. I love each and every one of you. Hope y'all have a good day. This reversal trade was just too tempting. I had to get in on it on another trading combine. I didn't want to waste any of the profit I had on the other one. But you can see it's still going up. There's no sense in letting it stop me out there. If this is a fair value gap here, so I'm thinking 50% of that fair value gap would be a good place to put my stop. I think it'll wick into it. And then we could reverse again. So this is the second trading combine. The other one I already had it may not get to 50%, but I'm going to get some money out of this dadgum thing right here. The algorithm is tuned to trade those. These all are volume inefficiencies in the sell side. imbalance. Uh, and so the market, it moved through there so fast, the market wants to trade back into it. All right, I'm going to go ahead and kill that trade then. Yeah, I'll leave it. It scared me there for a second. You see that wick down? I'm gonna go ahead and take it off. That's $337.
Order
I
filled.
mean, I can't complain about that. I was down a little bit on this one, so that's 316. I do think it's going to trade up to this mark right here. This consequent encroachment of that fair value gap I've had on there for several days, but this line right here is where I think it'll eventually trade to. If a man was inclined, he could go ahead and take a short here. Let's see if we get down here to this big red line. I'm stopping there. I've got $300 on this one. I've got $1,100 on the other one. I'm calling it a day. I'm preserving my profit.